Good evening, ladies and gentlemen. Good evening. Spotlight, please. Thank you. Welcome to Redfield Properties education series for our clients. Before I begin, if you all could hear me, could you just give me one, just type one in the chat box, right? If you could hear me clearly, kindly type one on the chat box so that I know that you all are able to hear me out and also able to listen to me in a good sound feedback. Thank you very much. Thank you for joining us today. We were expecting about 85, 86 people joining this call. Probably some of them are coming on as we are going along the way. So before I start the day, just introduce myself. My name is Jonathan. I am the Group Chief Operating Officer of Redfield Properties. I overlook the operations of 3 of our market centers and the region of Malaysia, as we have been awarded the license to utilize KW, Keller Williams system and models to run our business in real estate brokerage in Malaysia. Keller Williams is the largest real estate company in the world with 180,000 agents and 33% market share in the US market. So we come from that angle where we want to find a way in this season of uncertainty to kind of add value to the clients that has been kind of be in connection with us. Either you have bought something from us or someone is bringing you to a new relationship through the journey of your real estate or whatever that is. We have kind of cross path. Our goal today is to find opportunity here to kind of help people to understand what's going on. I think one of the most important thing that's happening here right now is that whatever has happened in this COVID-19 pandemic, has never really happened before in the last 5-6 decades, right? This is something that's unprecedented. One of my mentors shared what has happened. It's as if in that movie called Deep Impact. I'm not sure whether you all remember this movie called Deep Impact, when an asteroid just kind of hit planet Earth, and the whole world just kind of shut down and stopped. So that's kind of what's happening right now, and that asteroid is called COVID-19, right? COVID-19 kind of hit us and kind of shut down everything else in the entire world. And the thing is this, it is not an Asian or Malaysian situation. It is really a global issue, right? Now, before I begin, I just wanted to just kind of feel the ground here of the participants in this call, because your time is valuable, and I'm trying to find a way to make sure that I'm going to be able to really add value by really understanding what are some of the things that you are really trying to gain out of this session. If you don't mind writing in the chat box, what are some of the things that you are expecting to learn or expecting to kind of bring home from this session today? If you don't mind using the chat box, we want to make this a very interactive session before I kind of show my screen and go through some of my presentation. But just want to try to get the feel of the crowd here. What are some of the expectations that you expect to kind of receive from today's session? If you don't mind writing that on the chat box, please. Thank you. Anyone, feel free. While I share my screen, please kindly, if you don't mind sharing that on the chat box, that would be good. Anyone, there you go. Anyone wanting to share something on the chat box? Not getting any response. Is this the right time to buy a new property? Want to understand the market situation? Awesome. Anything else? Thank you for sharing, Risnita. Thank you for sharing, Suzanne. What's next to watch in property? Yep, absolutely, Fred. We're going to talk a little bit about that today. What's next? Anything else? Anyone else? Okay, cool. Basically, generally trying to understand what's happening right now. And take note that I don't believe that we are prepared for this situation. We are not. Globally, nationally, we are not prepared for this situation. It is something that is unprecedented. So one of the things that I always do is I go and speak in a lot of the investment seminars and a lot of investment conference that I go to. here in Malaysia and Singapore as well. I do a lot of that. I do participate with the Age quite a bit in terms of contributing to their stories about properties in city and country. I'm one of the frequent contributors to that publication. So that's just a little bit about me. I've been in real estate for the past 16 years. When I started, I focused a lot in the upper range market, especially in the areas of Montclair, Damansara Heights, Bangsa. I do a lot of those properties, but somewhere in 2009, 2010, I kind of moved on to management and wanted to run a business that it's empowering and supporting real estate agents to their clients and kind of trying to put a different role in the real estate where I wanted to embark on a journey to try to find ways to add value and impact the market. And today I thought I want to bring that opportunity to kind of try to share what I think. And I'm also an avid investor in real estate. During the last crisis, when the Lehman Brothers collapsed, what we call the global financial crisis, I bought 4 properties in 1 year. And those days I remember loans, 90% loans were so accessible. And the stringentness of getting financing was very loose, very easy. As long as your credit score is good, your income statement is good, you could get a 90% financing. And I remember in those days I bought up to 4 properties, and the global financial crisis didn't really hit the property market that bad. It touched a little bit in the KLCC area and some areas, but not generally that bad. We were kind of not affected as bad as the other crises that we had. I think one of the biggest crises that I think that affected Malaysia was probably the Asian financial crisis. But today, I just want to go through some property market report and analysis. During the MCO period, there was a report that every year JPPH or Jabatan Penilaian Harta Tanah Malaysia release report of what has happened in a year of 2019, and that was kind of released virtually this round during the MCO period. A friend of mine, one of our colleagues, Ying, who runs a business called MHPI within our platform, actually kind of did a overview of that, dive deep into that report and kind of bring certain aspects of the report that is relevant to the general market and kind of gave an overview. And I'm using some of his materials that he has extracted to kind of run through with us what happened and potentially what's that trend showing and what's the impact that we will see post COVID-19 or even during this COVID-19 pandemic. And these are some of the things that I think are going to be very interesting. So feel free to kind of interact with me on the chat box if you feel that you want to ask questions or you want to respond. Feel free to do that, and we will kind of go through the market directly. Yes, we will go straight to the point. Thank you. Now let's go through this. Now the thing is this: everyone is asking us, what's going to be the market like? How much is the market going to drop, or how much of the market is going to increase, right? We have a lot of this kind of thoughts. Now, I don't believe that anyone can do that, because if there is someone that comes out into the market and say, hey, it's going to drop by 5%, by 10%, by 20%, I would challenge and ask, what is it based on? Because real estate is not complicated. Let me repeat this. Real estate is not complicated. It is a rule. It is kind of governed by these 2 key factors that's trying to find an equilibrium. And these 2 key factors is what we call supply and demand. Right? If you understand where the supply is and where the demand is, you kind of can see a trend in properties, right? So demand being the people that's going to consume the property, supply being properties that is already available or will be available for the market, for the demand to buy. Now in 2019, hang on, let me try to, in 2019, this is what's happening right now. What happened in 2019 is that the volume of transaction, we need to understand what's the majority of the transaction in the market. Over 63% of the whole total transaction in real estate in Malaysia were in the residential subsector, Of course, the agricultural, industrial, commercial, and development, and others are the other subsectors. But the main chunk of most property transactions were in the residential subsector. The total value, however, of transacted, I believe, was about 130 billion US ringgit of transaction. About 51% of it are actually in residential. So residential market is a major subsector of our property market. And I think generally that's pretty much across most developing countries as well. So understanding that residential is still a key component or the key driver for the property market. Now, if I look at a trend of four years trend, right, you can see that the residential subsector is always the leading subsector among all subsectors, right? So these are the sectors of residential is always the number one demand or supply factors for the property market. And the other data that's very interesting is for the first time, there is actually data to determine whether is this property done on a secondary market or on the primary market buying from developer. And you can see that 73.6% of the data is indicating that the transaction is happening between individual sellers and buyers, meaning individuals, buyers, and sellers are actually transacting 73% of the properties in Malaysia, and about 28% or 27% are actually developer units or maybe other transaction between companies and individual. But generally, individual to individual transaction is the majority, 73% of the particular transaction, right? And you can see on the left corner where this green bar chart here indicates that properties above 1 million had about 18,000 transactions, 500 to 1 million is about 40,000 transactions, 300 to 500K is about 56,000 transactions, and of course below 300K is 213,000 transactions. So that's kind of sum up the number of transactions divided based on a price range, and 73% are actually transactions between individual sellers and buyers. Now the way they kind of capture this transaction, it is based on the registration of titles. And now because developers right now, the new laws have came to pass that titles are supposed to be transferable upon VP of the development of the property. So that's actually kind of reasons why I think they're starting to collecting data for developer and individual units. So about 65% transactions are below 300,000, right? So about 35% are above 300,000. So that's generally a snapshot of the price range and how are the transactions being transacted between what kind of sellers and buyers, right? This is for the whole entire Malaysia, Ying. So whole entire Malaysia. I didn't break into the states for this kind of data yet, but generally this is the whole entire Malaysia. Okay, let me go on. Okay, now volume of transaction, meaning based on states, where are the volume of transactions? Selangor being the largest state with the most volume of transaction, followed by Johor, Perak, Kedah. And KL, surprisingly, KL is not the first ranked, right? It's not the first ranked because it's not a big city, right? Only about 2 million population, whereas Selangor is about 6 million, 5.9 to 6 million number of, what do you call that, population. So the population ratio to space as well is a factor to consider. And Johor is actually number 2 in terms of the total volume of transactions, right? You can see between KL and Selangor, it's at least four times more than KL. Selangor has 4 times more transaction than KL, right? And 20% of the whole market transaction are all in Selangor. So Selangor is a major area of transaction where property are transacting a lot, right? Now let's look a bit about property transaction value. What is the value like? Now this is what we call a house price index. This is what we call the Malaysian House Price Index. It's an index that indicates the movement of price change, right? So if you see this movement, it indicates, for example, in 2010, the average price increase or average price change, it's about 5.5%, right? So if there is a decrease, it will go below this line, right? So if you've seen the past 9 years, right, it has been having increase. Now, what we are seeing now is the normalization or tapering down of the increase of price. So the peak of the market that I saw based on data, it's in 2012, where the average price index increased by 13.9%, right? And in 2013, it's down to 11.2%. Now, what's happening here is that this is the period where developers were launching a lot of new properties. This is the period where you will hear things like DIBS, Developer Interest Bearing Scheme, where developers will bear interest for the buyers, right? Or anyone can get a 90% loan, right? So the stringency of securing financing, and also developers pushing products and bringing in the demand, bringing in the supply that is relevant to the market at that point in time was there. And that's where it peaked, right? It was really peaked in 2012 and 2013 kind of stable down. And this is when, at this point, Bank Negara decided to implement the cooling measures. If you remember, loan to value ratio was dropped from 90% to 70%, and DIBS was no longer what do you call that, allowed by central bank. So you see that change, right? And if you look at 2010 versus 2019, if you had bought something in 2010, this potentially, if the house price index was at a level of 100, you have seen that the price index will have grown. So you probably potentially may have doubled up some of your investment. Generally, if you have bought in correctly at the right time in 2010, you may have seen some 50% or even 70% increase in terms of your price, right? And the 2019 versus 2018 growth is about 1.9%. That's probably one of the lowest ever in the past 10 years that we have seen. Now, what it's saying right now is that there is going to be an adjustment of price. This is going to be the fact that buying properties or the prices of properties right now are definitely in an adjustment mode. There will be adjustment of price. And you can see sharply going the past 2-3 years, right? The price increase is tapering down. So what's next, right? It's looking to come slightly in the zero normalization or maybe below, right? So you will see certain adjustment in price. Now, because the price index is an average movement, right? It doesn't mean that everywhere is going to be 1.9% increase only. You might see some areas doing better than others, but this is just an average. And some areas you might see changing in terms of price reduction. The property that I bought, I'll give you a very good example. I bought a condominium in Mont Kiara 5 years ago. I bought it in view for my parents to live. And when I bought it, it was about 640,000. 3 weeks ago, my neighbor or my parents' neighbor who are staying in that house right now, they sold it for 540,000. There was a correction of 100,000 in that block right now. Now, is that an opportunity to look at buying something there? Potentially, yes, because I'm an owner there. I'm being very open here to share with you some of the changes in the market right now that's happening. And COVID-19 is probably accelerating some of these changes, right? So I'm just giving you an example of what is changing right now. And this is basically, I want to focus a little bit more on the, what do you call that, residential properties. And you can see high rises, terrace. Yeah, it's kind of giving you an indication of what's their growth right now, right? And we can say that the growth is pretty flat, right? It's pretty flat. Now, if you look at the whole entire Malaysia or the our states, right? You can see that certain states are increasing price slightly higher, and because those properties are priced lower, right? They are the ones that are selling 200,000-300,000 and below, right? So those are the location or those are the states that actually are seeing gradual growth. Because if it's a 300,000 property, a 5% increase is very nominal, right? So we are seeing that in the other states that are not as heavy populated as the other states like Selangor, Johor, or KL. But you can see KL is hitting some sort of a place where it's kind of trying to readjust itself. So one of the things that I understand in the journey of investment in properties is that there is actually what do you call that, opportunities in every season. Now, if you look at this chart, you would ask yourself, what's the opportunity here? What's the opportunity here? The opportunity is to look at the gaps, right? Because major metropolitan area will not have lower demand. Like, you will not have lesser population in KL or Selangor. And that's the characteristic of Malaysia. You don't see Malaysians from KL moving back somewhere else. It's difficult, right? It's difficult, right? Unless you are retiring or generally, you don't see that kind of outbound out from the city center or major metropolitan area. You see changes between metropolitan area like KL, JB or Penang. You see that movement a lot, but you don't see the movement. You will see very rarely, I move from Kelantan to KL, and now I'm from KL, I'm going to move back to Kelantan. That's not common, right? That's not the majority of that kind of movement. The migration patterns that we see are from rural to urbanized areas. That's the major migration pattern that we see right now. So you can see that these are the key areas that are having positive growth. Pahang, Terengganu, Kelantan, Perlis, and Penang, they are having positive growth. What does it mean? It just means that the movement of the volume of transaction has actually reduced in 2019, okay? Now, what are the stocks? Let's go into the area of supply, right? Right now, existing stock, residential units, we have about 5.7 million units. Now, the population of Malaysia is about 32 million. Plus and minus, I'm talking about the actual legal population, right? Where census are picking up real registered either citizens or people who are legally allowed to stay here, right? So about 5.7 million residential properties. Service apartment probably is kind of as a separate subsector because it is technically commercial property, but being allowed to utilize as residential property. You see that it's about close to 6 million residential properties actually in Malaysia that is ready for occupancy right now in a population of 30 over million. That's the kind of existing stock that we have right now. There you go. And the incoming supply in 2019, we are seeing about 500,000 more units coming in of residential property. I will go into that later, Jean, as I go along the presentation. Thank you for asking that question. So you can see that incoming supply. Now, property is what we call an inelastic product or an inelastic product, right? So you cannot have so much property in a short period of time. The demand and supply movement cannot move very fast, right? You cannot increase demand overnight. You cannot increase supply overnight, right? In fact, supply probably takes more time to increase than demand. That's why price goes up, right? So that's where you see that the supply, what the problem we have right now in the market is we don't have enough right supply to meet the right demand. Everybody wants to buy a home right now, but a lot of them are kind of priced out of the market, or they are not able to afford some of the properties here. So that's the situation that we have in Malaysia right now. It's not that nobody wants to buy. The behavior of transaction of people are still showing us that people still wants to own property here. And being Asian, buying your first home, your second home, buying a home, it's really culturally necessary, right? It's really culturally important for us. You won't allow your daughter to marry the husband who is potentially not able to own his first home yet. Some of us are that. There are some people who has that kind of cultural beliefs, right? Before we get married, we must buy our first home first. Or eventually when we get married, there's a plan to buy our first home. So there is always that cultural aspect where demand will always be there in Asia. So that's just going to be it. And this is a planned supply in 2019, meaning these are being planned to be built. That's going to complete, and these are being planned to be built. You can see it's about the same average, about about 500,000 over properties, residential properties that's being planned. Now let's look at the primary market report. Basically, generally, what's happening in the entire market for new projects. Now you can see that in 2015 and 2017, you can see there's a steady kind of growth of sales, right? And then in 2018, kind of tapered down, and 2019, it's tapering down. These are the unit launch in terms of what's available for sale that the developers have launched in the market. And this is the number of sales that has been done. 2015, 2016, 2017, you can see it's pretty flat. We did better in 2019 is because the government has launched a program called HOC, a home ownership campaign. So you saw 40% of take-up rate in those markets in 2019. When 2016, 2017 was one of the challenging moments for developers, where that's where we start building overhang properties. Overhang means either unsold or overhang. Overhang means property completed 9 months and unsold still. So those are overhang properties. And I believe what has happened in that time is because of the optimism of 2013 to 2015, most developers were trying to launch property in the upper range market, where the population of the current demand is not demanding those higher end market, right? So the sweet spot right now is to find a way to build a development that has that value proposition of good lifestyle but affordable living. All right, good lifestyle, but the affordability is still an important aspect. So this is where the sweet spot is for if you're in the market looking for new properties, right? One of the things that you need to think about is what would the market be like 5 to 10 years down the road? Because either I'm renting out or I'm selling the property, and how would the people or the consumer look like? And we'll dive deep a little bit later of what kind of current consumer and future consumer behavior look like, right? Now, these are the trends in terms of new launch or residential. You can see that terrace houses, of course, is the more popular trend. Whatever is launched, 43% has been sold. Second is actually high rise. And then the unit launch has the most unit launch and the most units sold. Even by percentage ratio, it is lower than semi-detached, but you can see that actually there are more high rise sold after terrace house. So terrace house is still the #1 demand, and #2 is actually high rise, and then comes the rest. And these are the price range as we mentioned earlier. For newly launched projects, 700,000 to $1 million, you get about 37% of the market of those transacted units sold based on launch, right? This is just the data that we have. Okay, now this is very important as well. What are the supply in the market? Someone asked this earlier, this part of the presentation. Is this the right time to buy? And that's a very subjective question. I would ask more and go in detail and ask more questions like, what's the purpose of buying? Why are you buying? When do you need to buy? What's the key purpose of you buying? And what's the horizon of you using this property in the next 5 to 10 years? And I think with that perspective, you will probably get a better, clearer understanding. Now, this is where we have the overhang trend. As I say, overhang means properties that is completed, unsold more than 9 months, right? Now, you can see that the property overhang start building up from 2015 all the way to 2018. Now, the reason is because the market shifted and a lot of the developers didn't really shift. What I mean that is that they were building developments where a lot of the demand were not demanding that kind of developments. That makes sense. We have a lot of higher end market products in certain areas where it was not really a high-end area. Then you have high-end developments in those areas, right? And that's where because market will always adjust themselves, right? It's always the rule of supply and demand. What kind of demand is there versus what kind of supply is there? Now, to say that there's no one buying properties, I don't agree with that point. I think the argument is that the demand that is there, the kind of people that wants to buy properties couldn't afford the supply that was coming in. And the supply that was coming in from 2015 was a spillover from the 2012, 2013, 2014 optimism of the market. Because that's when the market went up 12.9% in the house price index in terms of increase of price. So because of that, that optimism kind of fueled the developers to build more properties for more profits, and it was just the way the business model was set, right? So that's where we are seeing that issue of having an overhang property. And we're going to go deep little and see where are the majority overhang properties. That will give you a better perspective. Because overhang properties, as I said, this data is for the entire Malaysia. And you've got to see where are the location has the most overhang, right? And you can see in 2018 was one of the peak. And in 2019, we had more sales of overhang properties. That overhang dropped because the government did the right thing by introducing the HOC program, a home ownership campaign, where there were incentives given to buyers who have bought property at that point in time. And that HOC campaign right now is now being reintroduced this month in July, coming soon. I think in June. I think it's been introduced in June for a certain period of time. And one of my colleagues later will kind of explain through what does that mean and what is HOC and who can qualify. And I think that's the opportunity that we want to explore here right now. And you can see because of HOC, you will see that demand will come back a little bit more stronger because there are now policies in place by the government to motivate buyers to start acquiring. I'm going to pause here for a minute. Is there any questions I could answer right now? I'm just going to pause here for a second and take a breather here. Is there any questions I can answer here right now? Anyone got any question of any sort? Okay, if there's no question, would your support please help me? I cannot see my screens that well today. Yeah.
Yeah, we'll help you to monitor.
Cool, thank you. Properties overpriced. I think overhung properties generally are overpriced. Overhung, meaning they are already completed and unsold. Generally, they are overpriced because if they are priced correctly, the market will absorb it. Right? So, and as I said, because they were fueled by hyper optimism past the 2013 to 2015 period, right? And everyone wanted to build high end. And you went anywhere in the market, very Cheras, Mont Kiara, some parts of PJ, anyway, people were selling $800-900 per square feet, right? Everything was 800,000 to a million. Everything was 700,000 to a million, right? So that's where I think that kind of over-optimism was driving the market forces, which is the developers, to kind of price their property that way so that they could get that kind of profit that they wanted. But I think there is a limit in terms of where the demand is. There is always demand to buy properties, but because the supply did not match the kind of demand that the demand wanted, right? I believe everyone wants to own a home. Any good reason to part with cash now to invest? Absolutely, if you get the right deal. If you get the right deal. Secondary transaction marketplace. So I don't understand your question, Jin. I'm going to rephrase it so that I can understand how to explain. We don't have data prior to this year because data prior to this year did not indicate subsale or primary market. And primary market was kind of not recorded because there was no registration of titles. Right now, this is the first time that we can see that subsecondary and primary has that kind of what do you call that, dynamic. So this is the first year we are seeing that data. So I don't have a trend to tell you what to compare between last year and this year. This is the first time we are seeing that data right now. Hope that answers your question. Now, then we are seeing where is the state and the location that has the most overhung projects or overhung properties. Number one, jang, is Johor. Now, there were a lot of optimism in Johor because of the Iskandar project, right? Huge optimism, followed by Perak, then Selangor. And you must understand, Selangor is a huge market. You have north, south, east, and west. Anything, in my opinion, that is central, west, and south are normally the right place to buy properties in Selangor. The northern side and the eastern side are the secondary locations. Now, what is west? anything from KL down PJ, Shah Alam, Klang. That's the western part of KL, or of Klang Valley. And if you go south, you go KL, Subang Jaya, Puchong, Cyberjaya. Those are the south part. These two parts, if you know Klang Valley, the west part and the south part are the place for investments. If you ask me where is the traction, that's where the majority of the population is, right? And one simple way to determine that is this. Which are the highways? Tell me in the chat box right now, which are the highways in Klang Valley that has the most jam, traffic jams? Anyone? Federal Highway, LDP, which highways are the most traffic jam ones? Anyone? You all forgot about traffic jam after MCO already. Anyone? LDP. Yeah. How about Federal Highway? Federal Highway as well. NKVE. Everyone missed the jam. There you go, Federal Highway. So Federal Highway, where is Federal Highway? Federal Highway is the western side. KL going down to PJ, Shah Alam, Klang. Correct? Where is the southern side? Right? Subang Jaya, NKV, Subang Jaya, touching to Puchong, or your what do you call it, MX Highway, they're all southern side. Right? So wherever there's the most traffic jam, that's where the population is. Now, if you are buying for investment, this is the thing that I was interviewed, I was asked to speak in a H property convention a couple of years ago, and I went on stage, I said this in front of 400 subscribers of H Property. And I told them this, I said, if you're looking to buy properties where there's investment, right, for investment purposes, right, you buy where there's traffic jam. If there's no traffic jam, don't buy. If you're buying for investment, you're buying for own stay, that's your choice. You want to stay in a place where there's fresh air and all that, that's really your choice. But if you are looking at investment, be it 5 to 10 years or 3 to 5 years, doesn't really matter. When there is traffic jam, that's the place to buy. Why? Because that is where demand is. That's where the population is. That's where people hang out. That's where the behavior of consumer is. Everybody wants things to be convenient, right? So traffic jam is the norm of life for those metropolitan areas, right? So that's where you want to see where there is traffic jam. That's where you need to kind of focus on that place as investment. Now, one of the other data that we have to kind of show you is that 48% of the overhangs are actually high-rise units. Terrace house are 32%. Semi-detached, others, and low-cost are the lesser ones. So terrace houses, high-rise properties are the majority subsector of overhang, but they are all not in KL. Right, the majority of them are, the big majority, Perak, Johor, and some parts of Selangor. So you have to think about which location that potentially would sell. Now, I'll give you an example. If today I have a property in PJ, now let's just do a quick research here right now with the people we have here. I cannot see how many people we have here today. Retro support, how many people we have here today?
86, including
86
people. I'm sorry?
86.
Okay, we have 86 participants. Okay, now 86 of you guys, I'm gonna ask you a quick question. If we have a double-story link house in some part of Petaling Jaya for 650,000 brand new, how many of you will buy right now? Jonathan say you'll buy 2. Anyone? Only 1 person will buy. Okay, Cindy will buy. May, Hannah will buy. Okay. Right, you will buy. Awesome. You will buy. Now, question, does it exist? Brand new, huh? Does it exist? Do you think there's something like that? It doesn't exist. Why? Because there is just no way that anyone could build that kind of property. Right? So it's about pricing it correctly. And today I make a point, if I price it this way, some of you will buy. And that's where you will see developer moving that direction to try to find the sweet spot of that offering and that value proposition. Right? So that's where it is. And we know the next best thing after a residential terrace house is residential high rise. Because everyone wants to stay in PJ. Another question, if I can give you a 1,200 square feet property, condominium, reasonably equipped with reasonable facilities at 500,000, how many of you will buy in PJ? 1,200 square feet, maybe leasehold at 500,000, how many of you will buy? Brand new. Only 1%. All right. But that doesn't exist as well, right? Because nobody is able to develop that kind of product or the kind of product to hit that market, right? So the goal is to find what's the next best thing, what's that median range, that the sweet spot that everyone could buy, and you have to do a research and look at the current market. Where are the supply going on right now? And I think my friend, my colleague Yien will go through that journey with you all later at the end of this conversation to kind of give you that perspective. And you can see in terms of price range of high-rise units, right, that's overhung. Above 1 million, actually is the 300,000 to 700,000 has more overhung than the 1 million ones. I wonder why. And these are the probable 1 bedrooms for 700,000 or 1 bedroom for 500,000 kind of property potentially that is kind of overhung right now, right? So the 700 to 1 million, not bad. It's not as much overhung as the rest, right? So that's interesting. Sorry, got one more data here. That's for terrace house and semi-detached. Just quickly go through that, right? You can see that above 1 million has lesser overhang. This range has more overhang. Probably because these areas of overhang are in areas that are not the best areas. Even though it's cheap, it doesn't mean it's in a good location. And the mantra of property is location, 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 right? Now the next thing is, what are the trend of unsold under construction? You can see that also dropping down because of the HOC campaign that was done by the government. So I foresee right now in this season, this campaign that the government has initiated would definitely drive sales and would definitely drive demand to kind of take away some of the supply, okay? Now, this is where it's a data to kind of show you sold or unsold under construction or launch units, right? Launch units, you can see high-rise units, there were 103,000 units launched last year, whole Malaysia, right? Whole Malaysia launched, about 35%, sorry, about 64% was sold, right? 35% unsold. So high-rise units does have that demand. Terrace houses, 57 sold, 42% unsold. So you can see that actually high-rise property has a good demand right now in the market. And a lot of people are actually buying for own stay. And that's healthy. We want to have more people buying for own utilization than speculators out there. So that's important. I think Bank Negara did a very good job under Tan Sri Zeti by initiating the control measures to limit people from borrowing 90% loans back then. So I think that kind of helped us cushion our market from a systemic shock, right? So let's go into this unsold under construction status, right? Again, you can see that Selangor, Johor, Perak, these are properties that is being constructed but not completed yet, that is unsold, right? I'm going to quickly go through these numbers. High-rise is 50%, terrace houses is 35%, okay? These are still under construction but unsold in 2019. A lot of them are actually in Selangor, Johor, Perak, Penang, Sabah, right? KL is still not the most. This is the price range. Now, this is the other trend. Unsold, not constructed, meaning they actually sold the property, they launched it, but they have not constructed the property yet. Probably in the first year or the first 6 months of launching, they have not sold yet. And you can see that most developers are now having a longer period of construction. Back then, in the early days, there were 36 months to construct. Now you're seeing people going through construction period of 5 years or 4 years. Before it was only 3 years. Now they're extending that to 4 or 5 years to kind of allow the developer more space or more breathing time to kind of build. And you can see the trend in 2019, there were more sales happening, right? there were lesser unsold units in 2019 because of the HOC again. So again, these are indication that is consistent that HOC are going to push demand to come back into the market to start buying, because you get the exemption of the MOTs and other freebies that the government is giving you right now. So to answer the question of that person earlier this evening, is this the right time to buy? I believe this is the right time to explore and potentially think about buying. Right? Go in the market, explore, talk to a property consultant, someone that is in the property line, to kind of show you opportunities and take you through a journey of comparison of where is the right place or where are the right opportunities available. And I think Yien is going to kind of demonstrate to you how a real estate consultant should be working with you in that journey of finding a property. Okay. This is the percentage of performance of sales. You can see that high-rise is still the #1 perform subsector versus terrace houses or other subsectors, right? High-rise have a 54% sold. When they are launched, 27,000 units, 54% of them were sold, right? It shows that the demand for high-rise is still there. It's still there. The demand for high-rise and also terrace houses are very healthy. It is very healthy, right? Let's look at commercial properties, right? You can see Soho service residence, the demand is still there, was sold, right? 61% sold. What was launched under construction, 60% was sold, right? The unsold unit was about 31%. So, as I said, demand is still there, right? One of the things that's happening right now that we are reading, this is a good article. If you Google Forbes and you go through some of these articles where they talk about the global property market pandemic right now, one of the things that is changing right now, because everyone was so locked down in their homes, they then had a lot of realization where actually perhaps is this the home that I want to end up with for the long term? Is there another opportunity for me? Right, so a lot of people were in that mode of thinking. I can tell you, once the minute when we were giving the green light to go back into production or go back into the market to start selling properties in May, I think 9th of May, immediately our activity went up. A lot of people start looking at properties, look at changing, because I think staying at home for that 2 months kind of give us a perspective of, is this the property that we want to end up, right? So that's the opportunity that people start thinking about. And to understand the people, we kind of need to understand what's the population like in Malaysia, right? About 32 million as per 2016 census. And the most important aspect of it is that these are the key indicators of how our consumer look like. Now, what it says in this study by the Statistics Department of Malaysia, that the median age of Malaysians as of 2016 it's about 28 years. Now, it has not gone up a lot. I think it's about 29.4 right now. I'm just using this as an example. And over 69% in 2016, the population are actually what we call a very active age population. Like, it's still a very young population, meaning the average is a very productive population. This is the right time for a country to boom its economy, because the people are actually in that age of being very productive, right? So majority of people are in this age category. They probably may not have bought their home yet, right? This is the majority, and these are your future generation that will be buying the homes off your hand if you're investing right now. You need to understand that. And what kind of trend do they like, right? A lot of them think very differently. They focus on things very differently. So I just wanted to share with you that we are positioned in the right timing right now, because the population is a young population, and it's still a very productive population. So I believe that demand will always be strong, because this is the population that needs to buy. The question is, can they afford it or not? So what's the sweet spot for them? So I thought that I would kind of pause my presentation here again. Marcus, can you help me de-share my screen? I just can't click that button. Okay, I got it. Thank you. I'm going to kind of pause here right now, and I just want to kind of interact with the participants here today. What sort of questions I can answer for you right now? Before I pass the time to Yien, my colleague here, that will kind of give you a perspective of how we should think about buying properties right now. And then she has that ready for you right now. And what's the opportunity in the market for you right now? Well, if there's no question, maybe I'll just pass the time to Yien.
There's one. Can I put the question to you, John?
Yeah, sure.
Okay, there's one question from Kat. She said that she always feels miserable that on rebates on new projects. Can she assume that this sort of selling at the future price, they are buying into, right?
So what has happened is, now the reality is this, Kat. The reality is that all of us like discount. How many of you like to buy things with discount? We got to understand that the market here would like that rebate and discount factor to kind of help motivate them to buy. And it's also a kind of a mechanism that will help them structure their financing opportunity to get loans in place so that the cash capital outflow would be lesser. So it's kind of a mechanism that we are kind of hooked on to already right now. And also it's kind of helping the younger generation people to come into the market to own properties without much down payment. Because right now, if you're looking at an average house of 500,000 to 700,000 ringgit, right, in the good area, right, you probably need 120,000 in cash or 100,000 in cash. After you take off your down payment of 10%, you take off your stamp duties, you take off your legal fees, your loan stamp duties, you take off certain money to repair and renovate the house, you're looking at about 100,000 ringgit, right? So that's where the challenge of the younger generation here, either they go to their parents and ask for help, or they go get a loan, right? And a lot of them would like to go get a loan. So that's where the rebates and the mechanism is there to support that kind of buying. And I think that's where we are kind of hooked on to that kind of mechanism. So it's really a mechanism, it's a system that we are used to right now, because not everyone right now could afford to kind of get that cash to kind of buy in right now. So that's the challenging market we have, and that's the opportunity for us. And I believe this opportunity will not last that long. There will come a time that the banks will have to tighten and come in and be hard on it. So that's where this window of opportunity becomes tighter and tighter, because systematically you need to kind of put down payment in to buy something, right? You need to have cash in order to buy something, and that's kind of what it's supposed to be. But because of the system that allows that kind of flexibility has brought us this situation. But this is the opportunity right now, because you will not get this opportunity as long as it takes, because there will be a time that is going to be tightening. And on the ground right now, we know that most banks are kind of already being twisted by central bank to kind of be tighter right now. I suspect right after COVID-19 crisis, probably somewhere middle or end of next year, you will see that tightening happening, because we kind of need to narrow the gap of household debt. So that's where you will see liquidity for loans will be tighter than right now. So I believe this is the right situation, right time to consider looking at it, because these are the opportunities that's available for us. So Yien, why don't you take us on the journey of and how you would kind of give an opportunity to someone to look at the market right now based on your experience and all that. Yien is one of our top producing agents. She has done a lot of transactions. She's also an avid property buyer herself. So I'm going to pass the time to Yien and to kind of give you an example of what that opportunity look like based on the policies that the government has set for us right now. Yien, take us away.
Yeah, thanks, John. Thanks for the introduction. Hello, ladies and gentlemen. Nice to meet you. My name is Yien. I'm one of the project team leader in Redfield Properties. So it's very good to have all of you here. Thank you for making time. Okay, let me share my screen with you. Just hold on a second. Wait, can everyone hear me? Is my voice clear?
Yes, it's clear.
Yeah. Okay. That's like I'm talking to the screen. Okay, hold on. Okay. So yeah, John did the technical part. So I'm a salesperson, I'm a consultant. So a bit leisure here. Yeah, so most of you that are here are invited guests from your agents, right? And I'm sure you know that you got the EDM that today is also about like what's the opportunities to upgrade your living lifestyle in this crisis. So first of all, I would like to ask you, why do we buy a house in the first place, right? So yeah, to have a roof over our head, that is like the basic, the most important, to keep us safe, keep our families safe, right? And then also there are some people that like take it as a to have a security, because we want to buy a house and then hopefully we can pay off the loan by the time that we are jobless at the retirement age. And yet, you know, we still have a house to stay in and we don't need to serve the loan anymore. That is the reason why, you know, like my parents or some people will always say that, you know, try to get a house at the age of 30 years old, so that by the time you finish your loan, you know, at 35, you can finish your loan. By the time you finish your loan at 35, you are 70 or 75, right? So you don't need to pay your loan by then. So don't get the house too late, you know, else you won't have the money to pay your installment when you retired, right? So it's a security, it's another way of security. So and then also another one, another reason is also like to build up your equities. This is also one thing that I believe. And how else can we build up our equity, you know, if we just base on our salary? Most of us are like employees, but of course we have some business owners here, but majority of the people in the market is employees, right? So how do we then build up our equities? Is just based on our monthly salary. Then the only way to do it, the only way to build up our equity is through investments, and buying property is one of the very good tools for building up our equity. And the last is also very important, which is like lifestyle. A lot of people now buying a house is it's not just so that we have a place to stay, but we are looking for more than that. You know, the new culture is like we want lifestyle, modern, and comforts. Right. So let me share with you. So what are the ways that you can get a house? You can go to sub-sales. Okay, I'm sure all of you are quite experienced buyer here. Sub-sales is like you're going to buy from an owner who has already owned the house, okay? So it's like a secondary market. But that is the place where you need to have enough cash because you need to pay 10% down payment and all the legal fees and the stamp duties and so on. Whereas primary projects is actually purchasing directly firsthand from the developer who built the house, okay? And another third option is you can go to the auction market, and most of the time you won't be able to see the house, right? And you need to be financially able. Right. So why is like the new property market like so attractive right now? And first of all, because you know now, actually last time those days like 5-10 years ago, developers don't give so much of like discounts, rebates, and all of us still are required to pay like 5% to 10% down payment, even though we are buying new houses. And it's just like recent these few years, and you can see that developers is also more aggressive, and that is an opportunity because it makes it easier for us to own a house. And why are we not taking advantage of such situation, right? So I find that, you know, projects is really attractive in this way that we don't need to come up with the cash upfront, which it can become to be a big amount, because if let's say you're buying a 1 million property, it will be 100,000 cash, right? And then plus all the legal fees and stamp duty easily cost you another 50,000 cash. That's right. So property, if you buy from the projects, now you can get like 0 down payments or even more than that. Developers are offering sometimes even more than 10%, right? It depends on which project and the location as well. And most of the transaction fees on the S&P, the legal fees, and also the loan agreements, disbursements, stamp duties, most of the times are waived by the developer nowadays. And I just had a conversation with some of my sub-sales owners and sub-sales buyers. And surprisingly, they do not know that, you know, buying properties from developers actually are able to get these kind of waivers. When I tell them that, you know, they are really happy and they are surprised to know this. So that's why I wanted to share this with you, right? And then another good things about buying projects compared to like sub-sales is that, you know, when you buy a house that is brand new, what happened? Your tiles are new, your furnishing are new, your electrical and your pipings are all new. But if you compare with buying an old house, of course you have to get ready, you know, probably the pipings and all the electricity and all these things may not be like the most perfect one, right? And the tiles and all, you still need to do renovation. And for projects, you get 2 years warranty, defect warranty usually in general, right? Which means like when even after you get the house, you stay in, you can get a warranty. If there's anything wrong with the defects on the property, you will get warranted by the developers. And for projects, one good thing is that you can plan ahead, right? So you are paying a commitment, you are just paying a very minimum commitment fees now. And if you bump into a good project, you're actually buying a property that is like below property price, and yet you don't need to start paying your installment now. Okay, probably it's be completing like 2 or 3 years down the road, and we hope that economy gets better by then. So and it's exactly the best time for you to get your keys, right? So you can plan ahead and you plan your cash flow better. And right now, we also have a home ownership campaign for 2020 that just announced, and it's going to start, actually started on 1st of June until next year, June. Right, okay. So what's this HOC all about, right? So who is eligible for HOC? And HOC stands for Home Ownership Campaign, all right? And it's eligible for residential purpose and for Malaysian citizen individuals only, all right? And its price is for the property price range from 300,000 to 2.5 million, okay? And this is not for first home buyer only, okay? It's for even if you have purchased the first home, the second, third, fourth, fifth, there is actually no limits. Okay, if you want to own a home under this house ownership campaign during this period of time, right? But the thing is, this house ownership campaign, it's only for the primary projects, which is like if you buy properties from the developers. So what is the benefits? Okay, I will do, this is a table to show you the financial implication of it, okay? Let's say, for example, if you buy a house worth 1 million, okay? And your down payment, if it's without a HOC, you have to pay 100,000, right? And then the stamp duty based on 0.5% is 4,005. And you have to pay a MOT of 25,000 and a monthly installment of a 900,000 loan, about 3,700 ringgit, which total to 132,000 cash that you need to pay if you want to own a home, right? But now with the HOC, the government is saying that if for developer to participate in the HOC, you must first give the citizens, right, a 10% discount, okay? So for 10% discount, so you don't need to pay the down payment already, okay? And then the stamp duty is 0, and for the MOT is 0, and you just only take care of the installment monthly, which is 3,700. So that is like a savings of about 128,000 if you purchase a project which is like under the HOC, right? And this is actually excluding if the developer is giving you more than 10% discount. So this is just an example of if you purchase a HOC, you see how it helps you on the cash flow to own a property, right? Probably with just a booking fee of like 5,000 ringgit or even 1,000 ringgit. Depends on the project, right? Okay, so new project, it seems like a very good offer, right? But what's the catch? Because like I see some of you were asking, okay, you know, what if the property price is inflated? What if like this is not the right time to buy? So, and if I'm buying like an overpriced project, then there will be like minimum appreciation. Exactly, that is a valid concern. So, you know, and that's why most of the buyers will like end up like, okay, maybe we shall wait, you know, based on these general informations that you gather or you heard, then you will like, okay, we shall just wait, right? So, but the thing is, not every project is overpriced, okay? Maybe you can look into what's the opportunity we can share with you today, right? So this is actually a price chart. We are actually having a new project launch, okay? I'm just sharing with you that this new project that we are launching is what most of our customers are looking for, which is like below market price, okay? And this chart actually shows like the primary projects and the secondary project. The blue lines is the primary, which is like the properties that you can buy from the developers, whereas the red line is the sub-sales, which is already been transacting. So there you can see the price per square feet. This is like an estimate. Of course, the price did fluctuate. Okay, so but it's just an indication to let you know a feel of it. All right. So you can see that projects, right, which is the blue line, will always sell above the red line, which is like higher price, because the project is not completed, right? So of course the developer has to sell you at a future price, right? So that's why it makes sense that the project is always above the red. And then you can see that our new projects is like right down at the end, right? It's the lowest price amongst the projects, as well as it's even selling at below whatever the sub-sales is selling. So with this, you can see that there is a huge safety net there, all right? That if you buy this new project, okay, you definitely won't be buying overpriced, not even at the market price, but below market price. So there will be a potential and a good room for appreciation. Okay, I guess most of you are invited by your agents on a new project, right? So let me introduce you this new project. What is it all about? So the price per square feet is much lower than comparison to like the neighboring projects, but it's still a very exciting project. Okay, so this project is actually a freehold, residential title. So residential title is also very rare, because if you know, in PJ or even in KL, most of the new launch projects, they are all commercial land, although they are under the Housing Development Act, which is under the HDA. So it is very rare for you to get a new project which is under the residential title, because residential title, so your credit assessments and even your water bills, right, it will be 20 to 30% lower price, right? And this is a low density. So low density, we have to look at the number of units as well as the land size, because not only like 452 units, but what if it's in the 1 acres of land? Then that's not really a low density. So for this project, it's 452 units and in 6.2 acres of land, right? And it's 10 minutes to One Utama Shopping Center. I'm sure most of you know this is one of the best shopping mall in PJ. I always go there. And this project is like a natural living lifestyle next to the forest reserve. And there is a MRT2 station 5 minutes away only. So what we are offering to the residents of this project is that we will give them 2 MPVs, and there will be a scheduled timetable to chauffeur our residents to the MRT, which is 5 minutes away from the project only. Okay, and this project has a very unique layout. It has a double volume and duplex and 20 feet height. So usually you get 10 feet, right? But this one you get 20 feet. I will show you how it looks like, okay, shortly. So generally the layouts is like 3 bedrooms. So you can see the sizes is from 1,291 square feet up to 1,765 square feet. So the sizes are generally bigger. So they are more for like family layouts. And you can imagine that 452 units, 6 acres of land next to forest, and 10 minutes to One Utama, okay? And with this kind of like more exclusive owner-occupied kind of residence, okay? So this is an example of like one of our showroom, which is 1,571 square feet, double volume, 20 feet high. So you can see that at this glass here, right? This is the ceiling, 20 feet high. And here will be the balcony. So you can imagine, you at the balcony, you're actually looking at the forest reserve, okay? Unobstructed view with 20 feet glass up ceiling, okay? Very impressive. Okay, this is the living hall. And we also have another layout, which is 1,765 square feet, which is a duplex. So this duplex is like a double story in the skyline, we call it, something like this kind of idea, because like you have 2 stories. All your bedrooms is on the first floor, your resting area, and downstairs, the ground floor will be your living hall, your dining, and your kitchen. So your activity areas are downstairs. So you have 2 doors, one. Upstairs, so you have a door, you can go up to the lift, and downstairs, so you have another door, you can go straight out to the lift. So if you buy a duplex, you are occupying the actual 2 floors. So if you buy 20th, you are getting a 20th and the 21st floor, right? So this is upstairs, right? So it's also a 20 feet height ceiling, right? So this project, you can see that the view, the orientations, most of it is facing north and facing south. So if you take the north view, you are facing the city view, which is totally unobstructed. Or if you take the south one, your balcony face south, it will be facing the forest, which is also unobstructed. And this is how it will look like, okay, the city view, okay, unobstructed city view. So this one was taken in the morning. Very beautiful. This is not just any normal unobstructed city view, because you can see that, you know, after, you know, we don't have any high rises, you know, within the 10 kilometer or so. You can really see really far, very, very far, okay? And this is a night view for the city view. We have all the lightings. And this is one of the pictures that we took for the forest view. So this is how it looks like if like during really early in the morning or after rain, you get the mist. Very refreshing. And bear in mind that this project is not like really far at a deserted area. You know, we are just like 10 minutes away from Wat Utama. That's why it's a very rare gem project, okay, that you can consider. And this is a forest facilities at the podium level. You can see we have this cascading waterfall, right? This is a 3-story cascading waterfall. Flowing, the water will be flowing back into the facility podium area. And then we have the leisure decks and the tree house. So the concept of this project is nature living. So though our project is located in the city, but you can also enjoy the forest, the greens, okay, living in the greens. And this is our swimming pool, which is the infinity pool. And the pool is designed to be looking at the forest. Okay, so you can swim and just next to the forest. And this is a gym. Gym is also facing the unobstructed view of the city. Very beautiful facilities you can have to enjoy with your family or even your friends, right? So this is for us to show you exactly like how and where is the location and how near is it. It is to Bandar Utama. So our project is here. You can see the forest is here. So that's why if you choose the forest view, it's totally unobstructed. And if you choose the city view, it's also totally unobstructed. Super rare project, exactly. So, and accessibility is one of the major decision factor when you choose to buy a home or a house, right? So this is for us to show you we are actually connected, very well connected with 5 major highways, the LDP, NKVE, Pechaling, Duke 2 and MRR2. So very convenient. And this is the MRT2 station that I was talking about. And this station, we actually have a direct stop at our financial hub, which is the Tun Razak Exchange, TRX, and Bandar Malaysia, Bandar Malaysia station as well, and also the KLCC station. So it's, I think it will benefit our residents because we are really strategically located very near to the mall. Accessibility wise is good. And also we have the train. So yeah, so it's like 5 minutes, 2.6 kilometers away. And of course, when we choose a home, we want somewhere that is like self-sustained and well-developed, established. The reason is that we know then that the demand will be there and we don't need to hold and wait for too long for the price to go up, right? Because some projects is like, if it's in a new township, you probably have to wait like 10 or 20 years for it to be fully developed. Then only can start seeing demands coming in and then the prices start going up. Whereas this is something that we are already in, you know, a mature established neighborhood where all the amenities, it's already there. That is the values of this project. Okay, so this is the train station, the line that you can see. KLCC is, TRX is here, Bandar Malaysia is here, right? And then our station is here. Okay, and this is the eateries and services in the township itself. So we have more than 100 eateries and cafes, and we have schools and preschools, as well as like banks like Maybank, CIMB, RHB, and also petrol stations and some of the restaurants, hero markets are also in the neighborhood itself. So it's definitely a self-sustained, established neighborhood already. And this is the Sam Darby Ramsey Hospital. It's just 12 minutes away, 5.9 kilometers. This is an international school, Sri Bestari, which is 3.4 kilometers away, and another international school 30 minutes away. And we also have like what is this called? A local Chinese school, okay? In the neighborhood itself, which is 3 minutes really near. And another primary school, 4 minutes, and a high school, secondary school, which is also 4 minutes away. So I actually put down in a table to show you like what are the projects surrounding. And actually what we look at really is the price per square feet, okay? When we look into purchasing, because price point is one thing that is very important. That is like in a well-established, with all the amenities really near to One Utama, you have train and all these things. But of course, prices is never cheap. That's why project surrounding is also selling like 800, 900, and 1,002 per square feet, as you can see over here. But these projects, we are doing a pre-launch, not pre-launch, it's an early bird launch, which after every discount rebate is only at 590 per square feet, and we are under the HOC campaign, okay? Booking fee, usually we were collecting at 5,000, but during this time, we are taking like 500 ringgit, all right? And for this campaign and for this early bird, we are actually giving a special cash gift of 20 to 30,000. Depends on the layout that you choose. We haven't disclosed the rebates and the discount. So if you really want to know more, talk to the agent that has invited you to this event, and you can make an appointment with us, right? And for this project, I can do a rough calculation for you, which is like the savings is can be up to 315,000. So 590 per square feet, and the saving is 300 with all the facilities you have seen just now, is definitely a value buy. If you are seriously looking for a house or a home, you really must come by and look out. And the layout is really functional and very practical as well. We already have a showroom unit ready for you, right? So this weekend, I will be there. You can actually book your slots with your agent for consultation, Saturday 10 to 6 or Sunday 10 to 6 p.m. Yeah, that's the end of my presentation. If you have any question, you can ask me.
Do you mind going back a few slides where you show that comparison between all the projects? There's a lot of conversation in the chat room talking about bulk purchase and all that. I just kind of want to address this bulk purchase thing, because being in the market for so long, I think it's important for us to kind of give you a few slides away, the one that has the comparison of all the other projects. Yes, this one, hang on there. So, sorry, the next one. Yeah, there you go. Bulk purchase comes in. It's not, the reality of bulk purchase is this, guys. It's not because you are getting a big deal. The goal of bulk purchase is, okay, a real bulk purchase is when one buyer say, I'm going to buy everything, give me a bulk price. That's the reality of bulk purchase. But in reality, that's not what's happening. What's happening is some guy promised the developer, I'm going to find 50 buyers. Give me time of 3 months to secure these 50 buyers. With this, give me this X amount of discount. Now, if you look at this comparison here right now, this project potentially can be a bulk purchase. If we as an agent who does fiduciary will come and go in there and say that, hey, why don't we just price it at $650? Let's do a bulk at 580 or 590, and then tell the people that we're actually giving them additional 30% discount. And that's how some of this bulk purchase work. In reality, right, someone is profiting from this bulk. You've got to understand this. Someone is profiting from this bulk. Someone is profiting more than the buyers from this bulk. You just need to understand that someone is making a difference, and when they are brokering this bulk, right? So that's really the essence of bulk purchase. And majority of bulk purchase are done most of the time, not all. I've seen some really good bulk purchase, some really good bulk purchase. Some bulk purchase are done very well. They really give value back to the consumer. That I agree. But there are some bulk purchase done in a way because the property can't be sold. Mm-hmm. That's the reality, right? It's priced above the market. It's not moving. So let's do a bulk right now. There are some that is good. I qualify my statement. There are some that is actually good bulk purchase. But there are some genuine ones, but there are also some that may not be the right bulk. Now, I have done a bulk purchase before where I went in and negotiated for 50 buyers because we are buying it together. That's where it is. Yeah, so that's why I said wrong. There are some that is genuinely good. There are some that is not. So the important thing is to figure out and be clear what the opportunity is. Yeah, so as I said, SH, I will just clarifying and bringing that perspective in. There are some good and there are some not genuine, right? They're potentially genuine. Some are real genuine bulk. And that's what you say. That's absolutely right. If you go in there with a cash deal right now, you get the 50% off. That's a genuine bulk. But there are some bulks where you are offer a special discount in this particular block. So that's where it may not be genuine. So I just want everyone to kind of understand what I'm trying to say here right now. Cool. Yeah. Is there any questions that we can answer from the floor here right now? Yien or myself is here to help you answer that question.
Yeah, I think if you want to know more about the projects and the rebates and everything, please go back to the agent that has invited you. Yeah.
Yeah.
And to me, like these projects, most of our buyers that purchase these projects are genuine buyers that are buying for their own stays. So we foresee that the community in this project is going to be good, and people are not buying to flip. So we can see that the retention could be high after VP, and therefore the price appreciation is potential for this project. Yeah.
So Andrew asked a very good question. What is the differentiate between genuine or not? That's a very good question. And here's the answer is do research. Go and don't listen to one agent that's proposing this property to you. Go and do your research and you figure out what's in the market. And a lot of agents are advertising that particular same development, and maybe you walk in, the developer say that's already sold and that only this agent have it, right? And those are the things that you want to consider whether is that genuine or not. When you have discrepancy of information in the market about that particular project, that's when you want to ask questions. Is this genuine or not? Right? That's where I would say that. Yeah, that's where I would say that. That's a very good question. So be very, very vigilant right now. To really ask deep questions and be very clear who is really profiting from this bulk purchase. Because I think the past 2-3 years we have seen a lot of all these bulk purchases going on that potentially could bring a lot of pain to the investors. So I'm just putting out there as a care message for everyone here right now. Yeah, so Joanne, you will reach out to your own agent that invited you to this session so that they will be able to give you the information directly right after this session, right? So, and they'll let you know. Any other questions about the opportunities? We want to kind of focus on the opportunities that's available in the market. Anyone want to ask any questions about policy from the government? Anybody want to ask any questions about what do you call that? The journey or the opportunities that's available for you right now? Anyone? Anyone else? Is there any questions here that you want to ask? Oh, there's a circular loan compression. Yeah, that's right. Loan compression is the other aspect of to identify whether this bulk is genuine. If someone is going there and tell you that buy 4 units one shot, right, and get loan compression, that's where you want to be very careful. And that's higher risk for the bank right now. So they're kind of trying to clamp down right now on that loan compression situation. There you go. Yeah, be very careful. Okay, it seems that we don't have any questions right now. So if you have interesting thoughts or you want to have conversations or consultation with Yien, she's available this Saturday and Friday, I believe. I'll speak to the agent that have brought you to this event and let them know, and they will be able to help you get in touch with us for more consultation and more opportunities.
Sorry, John, I just want to add on one thing.
Sure.
Okay. So for these projects, right, you can see that our units are big, right? So we also actually have 13 premiums units, which the sizes is around 3,000 square feet, and there's only 13 units, and out of the 13, we have sold 10 within 2 weeks only. So we left only 3 more units. So if you are someone that is looking for like a 4+1 premium units, 3,000 square feet, yeah, do come by this weekend as soon as possible because we are like left only 3 units.
I think getting a new home and getting a new environment right now, it's probably something that some of us are thinking about. And I think this is the right opportunity to explore. Now, not saying that this is the best time to buy. I think the best time to buy is very subjective. It's different for everyone. But important to know that this is the right opportunity and the right timing and the right season to kind of go in deeper and investigate and explore opportunities. I will highly encourage all of you to get in touch with the people that brought you here and then just go and explore and talk and start looking right now. I think there's an opportunity here right now in this season. Cool. Any last thoughts, Yien, for the audience here today before we close?
No, for me, it's like if you are really looking for home, even like maybe we are like younger, so we are more aggressive. This is definitely the best time to buy a property right now, because crisis is only every 10 years to me, you know. And how many 10 years do we have? 30 years old, 40 years old, 50 years old. By the time you want to buy at 50 and 60, it's very difficult for you to get a loan. So it depends how you see it.
Yeah. Awesome. So thank you very much, guys. I don't want to take your time off. It's already 10 p.m. So thank you very much for taking your time off. We will be having more series of education as well. We believe that as an organization, our responsibility is to educate the public and engage the public. So to kind of bring in certain perspective that would help public or yourself to kind of make decisions, to empower yourself to make that decision, to look at the opportunity of the real estate market. So thank you for selecting your time to join us on this call. Thank you, Yien, for participating and helping us bring some clarity in this opportunity. The rest of the agents who have invited the clients and you to be in this call, it's our privilege and honor to continue to serve you. So please stay in a relationship with the person that brought you into this conversation, and have that conversation to really run through your needs and leverage on professionals like us to be the consultant for you and be that bouncing ball or the bouncing mirror to kind of try to reflect where you are and where you want to go. And our job is to empower you with the right opportunities, the right information for you to make that decision that will benefit you and your family. So with that, thank you very much. Have a good night, and you'll see you in the next session. Thank you, guys.